Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, April 3rd. The world wakes up to a set of worse than expected tariff news this morning from the US. Equities are severely hit. Crude oil and copper are down, while gold and Swiss franc benefit from a swift shift towards safety in the markets. And as expected, the Liberation Day brought nothing less than further confusion, further chaos, and further uncertainty on the table. Now, all eyes are on how the other nations will react. So I won't make this long or complicated. Donald Trump's tariff announcement was worse than expected by many. The universal tariff was set to 10%. That's pretty much in line with expectations, but tariffs imposed on main trade partners are much higher than that. And we have numbers like 34% for China, 20% for Europe, and some 24% on the Japanese imports. The UK actually comes out less harmed than the others with a 10% tariff rate, while Vietnam and Lesotho are the hardest hit with tariff rates of 46 to 50% respectively. So those are quite high numbers, mind you. Now, of course, Donald Trump said that partners could negotiate with the United States to lower these tariff rates, but the tension that was building into the announcement of these tariffs and the initial shock will be quite hard to digest for many trade partners out there that also used to be close allies. So, as a result, the Liberation Day, unsurprisingly, brought only more chaos to the international scene. And we should not forget that 25% tax on foreign-made cars in the US is also going live today, if I haven't missed any news on that front. So voila, that's the tariff roundup. Next hours and next days will probably bring reactions to point at whether the rest of the world, like China and others, will let the US play its own game as it wants, or whether they will take their destiny in their own hands. Now, China already announced before the tariffs that it would restrict investments into the United States. Europe already warned that there will be retaliation, and Japan also said today that they will do anything to protect domestic industries and jobs in Japan. In simple English, this means that investments, global investments toward the United States will be partly, and how much I don't know, redirected to domestic economies outside the US. Now, the market's reaction to the tariff announcement from Donald Trump was quite strong and strongly negative. Vanguard's S&P 500 ETF, for example, fell almost 3% in the after-hours trading. The US yields tanked, gold rallied, and the dollar again fell to the lowest level since November as a result of a swift shift toward safety among investors. Crude oil, on the other hand, slipped below the $70 per barrel level on expectation that the tariffs would hammer global growth and demand, and copper futures that are considered as being a barometer of global growth tanked more than 3% after the tariff announcement from the White House. Now, we will talk about all that and about companies and indices in detail. But first, the pricing that we see this morning in the currency markets is clearly favoring a rising bet for retaliation from the other nations this morning. So the US dollar eased after the tariff announcement to the lowest level since Donald Trump entered the White House, as also the lowest levels this year, mind you, and the lowest level since mid-October of last year. And that is basically because not only will the US companies see their costs jump on higher tariffs or high tariffs or tariffs, just tariffs, which will boost inflation expectations in the US, but they will probably be hit by tariffs on their own exports toward the foreign markets as well, which will hit their revenue. So this combination of higher inflation on one hand, even if it's transitory, and lower growth and growth prospects will inevitably shake the US exceptionalism. The Federal Reserve will have to, choose its battle. Of course, it will probably choose to support the US economy in this hard task, as it considers that the impact of tariffs on US inflation would be a one-off impact and could be short-lived and hopefully partly countered by a sharp economic slowdown in the US. But the supply chain disruptions that these tariffs will cause could make inflation stickier than what they expect. And if that's the case, the US will feel the negative impact of tariffs for quite a long time before it starts seeing any benefits. The others, on the other hand, will also see their growth impacted quite heavily as well. The Eurozone, for example, could see the tariffs weigh on their GDP by around 1%. That is a big number. So the US policies could encourage the European governments to give support to their underlying economies, and why not further ditch whatever is left from their budget discipline. And the appreciation in domestic currencies like the euro and sterling, for example, could help taming inflationary pressures in these markets and the rest of the world if, of course, the US dollar continues to depreciate on plunging economic growth expectations in the United States. And indeed, it is this very expectation that the US economy will falter faster than the others has been weighing heavily on the US dollar since January this year. And the tariff announcement actually sent cable directly above the 130 psychological level yesterday after the announcement, while the euro dollar trades above the 109 level itself. It is going higher this morning, and the dollar yen tanked to 147 level right after the announcement. And the sell-off in the US dollar could eventually continue to give support to the major peers in the coming days. Again, if there is retaliation, the US dollar could see further losses. Now, inside equities, the after-hours trading looked like a bunch of US companies announced disappointing earnings all at once. Apple, for example, that still got great exposure to China, tanked more than 7% in the after-hours trading. Nike also fell by a similar amount, while Nvidia lost more than 5% and Tesla tanked more than 8%. And it's quite funny for Tesla because Tesla actually started yesterday's trading session with a decent sell-off on news that the car deliveries plunged by 13% in the first quarter of this year for various reasons, and it rallied to close the session 5% higher on news that Elon Musk will eventually go back to his job as the company's CEO, Technoking, as soon as he's done firing the federal officials at Doge. And while the company's share price tanked another 8%, as I said, on tariff news. And in summary, expect a serious sell-off in US equities when they open today. The futures are deeply in the red indeed, with S&P 500 futures pointing at almost 3% losses at the time of talking here, while Nasdaq futures point at losses of more than 3%. The European futures, on the other hand, are also severely down this morning, with DAX futures down by nearly 2%, as the European exports to the US are seen falling by 50%, guys, by Bloomberg after the tariffs. So that's the initial analysis from Bloomberg. While interestingly, the Chinese CSI 300 index is down, but it's down by less than 1% this morning, although the Chinese exports to the US are expected to tank by around 80% by the same Bloomberg analysis. Now, the news of retaliation and how much effort and money the countries will deploy to fight the United States back will matter for the direction in the coming days. For now, everybody's sinking, but the US is going under first. And in fact, note that corporate America has been preparing to weather the tariff shock by cutting their buybacks on tariff uncertainty in the first quarter of this year, as the buybacks fell to the lowest level since March 2019. So you see that the direction is not necessarily to the upside. I think that we are going to see more pain before any gain. But there's opportunity in sell-off. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me today. I hope this episode of Market Talk has been helpful and it has been insightful to you. Please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, and also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will see you again tomorrow, and until then, good day trading.